Hello, today is Friday, January 4th, 2007. This is Brian Shannon speaking from Alpha Trends, and the market's closed, and we had a real bloodbath here today. The SPY was down $3.80, or 2.62%, and looked like that 144 level was going to hold the last couple days, but we had a fundamental catalyst that had people selling their stocks from the open, and really not much opportunity for long side bounces in here today at all. You had to be really short-term oriented if you were trading that. The daily VWAP was pretty much heading down all day long, and it was just a series of lower highs and lower lows. Occasionally we had a little move. Right here I'd pointed this out on my blog, actually in the IWM prior to the move above it, but thinking that maybe it would bounce, but proved to be just a trap within this overall downtrend. So there's some real serious damage done here today. Now, yesterday we thought that the market was maybe starting to stabilize in here, as evidenced by the moving averages, but cautioned also that it's guilty till proven innocent with a declining 5-day moving average. And this is why you don't buy at support, or what looks to be support, because news and surprises often follow the direction of the trend, and clearly that's what we have here today. Now, I don't think anyone would have guessed that you'd have such a strong reaction to the employment numbers, but you always have to be prepared for anything in the market. Like I was saying, also the more times that support is tested, like we have in here at this 144 level, the more likely it is to fail. It seems as though looking at the weekly time frame, the market's due for a bigger sell-off, and I still think that it really looks ominous here. I think it's just a technicality at this point to take out this low right here. But I think you can consider this longer-term trend of the market in serious jeopardy and basically broken. You see that this uptrend line has been broken today and closed below it. It wouldn't be unrealistic to see the market come back down towards about this 134, 135 level. I think, though, that again the market's really getting oversold here in the short term, and maybe we probe a little bit lower on Monday, but you're gonna get some vicious rallies within this overall declining environment. And the fact that the 50-day moving average is down through the 200-day moving average gets a lot of big institutional money nervous. So continue to be very cautious in this market. And defense wins the game in a bear market, and that's really what it's looking more and more like. Again, it's just a technicality to make a lower low here. We do have the lower high, but what's been leading the market lower has been the semiconductors first, and a lot of people have been questioning, why do you follow the semiconductors? Really, they do lead the market a lot, and this group has been just decimated here over the last three or four months. And again, like I said earlier in the week, it looked as though they might have been searching for some support near that 400 level, but the bottoms are a process. There's no reason to buy just because it looks like it's at support, and if they don't scare you out, they'll wear you out in here. But these consolidations in a downtrend typically lead to further decline. And now when we look at the weekly time frame, you can see that the level we've been looking at, that 380 level, that's been violated as well. So this group was down 4.7% today. If we change the scaling on this monthly time frame, you can see that the lows from back in 2004 we're down close to 350. Maybe that's where this market's going. It's in a downtrend. It's guilty till proven innocent. We've had 3 terrible months here, you can see, for this market. And this month's just begun. 4 months, rather. Starting from this drop from 500 down to 372. They're never down too much compared to what? Not compared to what the next guy's, where he's willing to panic and throw his stocks away. So don't get sucked into that game of trying to buy the bottom. The bottom is a process, not an event. Wait for the 5-day moving average to at least flatten out, as I pointed out in the IWM yesterday. That this 5-day moving average flattened out. It signaled that maybe the buyers were back in control for a period of time. But when you have a declining 50-day moving average below a declining 200-day moving average, things are, the market's in serious danger, serious trouble. And now we had that level break, that $73 level that we've been watching for the last few months. And I was kind of thinking that, what I'd said yesterday is there's reason for concern here that a breakdown through the $73 level won't typically lead to a catastrophic decline after the market is extended to the downside as it is here. And this market in the last 7 trading sessions has lost more than 10% now. So it's clearly, to me, not something you would expect to see this type of magnitude of a sell-off. It gets deeper and deeper oversold here, but that's not a reason to buy. You want to wait for evidence, at least from the 10-minute and the 5-minute time frames. Picking a bottom is the hardest job there is on Wall Street. I'll repeat myself again there. The 73 level is going to have to be taken out for any bounce to materialize. But realistically, again, and this market was the first one to break this longer-term trend line. Looking at a monthly time frame, it's you can look at a lot of different areas where this market may have the potential to go before it finds support. One area that looks pretty obvious to me as a potential level is down near about this 68 level. That resistance from 2005 did become support in 2006. So, still, if you're buying, you're definitely early. Yes, the market is oversold, and it got panicky in here today. And maybe Monday we'll see a big turnaround, but caution is the best way to treat this market. And they got all stocks today. If you look at this, here's a list of what I consider to be leaders. Just something I kind of monitor each day on my list, and look for leadership in the market, either up or down. You can see First Solar down $20, Apple even down $15, CME down $25, and CME was down $30 yesterday or so. So the big leaders are really leading the market lower. And as I said, I think on Wednesday, it seems as though maybe we had some deferred selling due to tax reasons from people, not wanting to pay taxes on their big gainers in 2007. And now that it seems as though people are taking some of the profits on these big winners, like Google, which is starting to maybe look worrisome as it's held this 50-day moving average. That initial profit taking has led to a little bit of more panicky type moves in here. Now, the weekly uptrend in Google clearly isn't damaged at all, but the daily time frame with all this indecision here represented by the moving averages, and now the fact that it broke below this little trend line, it's going to get a lot of people panicked and worried. And I think that you're going to just see a lot more. Basically, the market needs to do a lot of healing before it has any ability to hold on to a gain and sustain it. So we've got on this weekly time frame for the IWM what I consider to be a true bear market, which is a declining 10, 20, 30, and 40-week moving average, with the 10-week below the 20-week, the 20-week below the 30-week, and the 30-week below the 40-week. And again, the 10-week is the 50-day. The 20-week is the 100-day. The 40-week moving average represents the 200-day moving averages. There's 20 days in a week, obviously. The NASDAQ 100 is also severely damaged in here. This market made a lower low in here. It took out this low here. So we took out this, we've got a lower high and now a lower low. The direction of the 200-day moving average is still rising, which suggests maybe we'll get some relief from this at some point, and it'll come back to that. But for now, it's damaged goods. And if you look at the height of this sell-off here, and we take that and put it to here, basically what I just did there was take the height of the first leg lower, which was from basically about 55 down to 48, so 7 points. Then take that same move and measure it down towards this level. We could still see a move down towards about $46 a share. Wouldn't surprise me, and shouldn't surprise anyone out there. Maybe we don't get it right away. The market did break below that 200-day moving average, and what I've been saying is that this market's been in a range of 48.5 to 52.5, and on the close, we did see the market did close below that level, and there was really no relief from the selling in here today. Big volume does tend to peak at turning points, and it looks like they just kind of threw them away here at the end, which might set up some kind of bounce trade. on Monday for super aggressive, super disciplined traders. It's not the type of thing that you should be going in and trying to establish a new investment, in my opinion. It continues to be a very volatile and dangerous market, and there will be sharp rallies, but overall I think we've got to start looking at this market as it's been more neutral than anything here, especially on this SPY. Go back to that video I did about 2-3 months ago outlining the case for a potential bigger top. It's starting to unfold. So just be real careful, and I'll talk to you again Monday.